Just don't provoke me, cause I don't need no cellmates. I'm in a 2-seat, doing drops like a mailman. This ain't no hoopty ass, she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we catch him off sides, he won't make it, no. Money on my mind, I can't get it all.
I've been outside, but right here, I'm inside True Pod Studios here in Garfield, New Jersey, with yours truly, Mr. Jonathan Hernandez. How are you, sir?
Doing good.
We're doing good, but the mic levels ain't there.
Yeah, sorry. No, I'm doing good, man. I was texting. Sorry about that. You know, my phone just
busy,
bling,
man.
bling,
Listen,
bling,
for everybody out there that doesn't know Jonathan Hernandez, I've gotten the privilege to know the man now for several months, and this guy's at 102 miles an hour every day. He's doing something.
Yeah, man.
He's not taking care of the family. He's taking care of business. If he's not taking business, he's helping somebody. So, kudos to you, man.
Yeah, I try to not waste any second of the day. And when I do feel like I'm not doing nothing, I go through anxiety.
So you're that type of guy that just needs to be doing something.
I have to.
Achieving something, completing something.
Yeah, that actually, this week, I was like, you know what? I'm not going to work from home. I'm going to go in the office, and I'm going to work from the office because if I work from home, I'm going to wind up doing too many things in the house. That's going to take away from me doing stuff with the business because I could always do something for the house. So, for real, because if I got to do, like, payroll, right, I might be like, well, fuck it. I'm going to clean the garage real quick. Next thing you know, that's 2 hours.
There's always something
then
to do.
Then it depends how heavy cleaning is. If it's real dirty or something, I got to sweep, mop, move stuff. I might get tired, then take a nap. I say, you know what? The whole week, I work from the office, whether nobody's there or not. And look, this week, we reprogrammed close to 30 laptops.
Oh, wow.
We had a lot of stuff done on the back end for the mortgage company. Okay. So, I think going forward, I'm working from the office.
Hey, listen, I think there's studies actually that prove that working from the office is more productive, even if you have the option to actually
working from home is more convenient, and people love the idea of working from home because they get to see the family more, enjoy the family more. But I don't know, man. I think everybody got to come back to the office.
Yeah, being a home base. I think Elon Musk just recently.
Yeah, he said if you don't come to the office, you're being fired. That's it.
You're fired.
You're fired.
And I think that has to do with what you just said. It's like you're just more productive here.
Yeah, man. Yeah.
But today's topic, I'm excited to talk about it because obviously, it's part of the American dream, right? To own a home. And
yeah, man.
You are privy to the processes.
It's called the American Bill.
The American Bill. Y'all hear that?
The bill you're gonna get? Nah. Yeah, man. The mortgage process. We did mortgage the other day, and I have a lot of realtors who follow me, and we actually have a lot of realtors who work for the company as well. And a lot of people are investing now into property so they can have rental income, and generate business activity. There's two different things between business activity and rental income. You would think, I'm turning into a business. And then people go, I'll tell you, well, are you turning a business or are you turning a rental? Yeah, I mean rental. Mm-hmm. Two different things, bro. So in this case, right, if I purchase a building for truthful taxes so we could work out of there, that's business activity. Okay. I'm not renting.
It's business.
There you go. That's a business activity purchase. So that would go on what's called a Schedule C of the business.
Now, what you're going to be diving into is obviously
we're going to go into the real estate investing portion as if you're a landlord, where rental activity and how to write off the correct expenses related to rental activity. So, all in a nutshell, hey Al, you bought a home, you're going to be renting it out. I'm going to show you how to effectively cut your bill dramatically and how it'll help you on your taxes. Okay. And we're doing something a little cool this time, guys. We're actually going to be showing you with live on the software on the screen right now. Not too many podcast people are doing this, but we want to bring a different edge to the.
Yeah, I'm excited to see it.
Al's going to be like this. We're going to switch off a little bit, while Al's going to be like. You
All right,
know?
listen, it's nonstop learning for me here at Truthful Taxes. Truthful Taxes. But before we do dive straight into it, John, I was curious, and I'm pretty sure many listeners are curious too. What's the difference between an investment property and me just buying a home, like a first-time home?
Yeah, first time home is you have a mortgage interest statement and you pay your interest on it. You pay your real estate taxes as well as whatever principals to the bank. But you can't write anything off on it. You can't, because they already give you a tax break for your real estate taxes, only up to $10,000. Okay, so if your taxes are $12,000, only the first $10,000 of your taxes will be credited as a deduction towards your taxes. So in this case, let's say you made $50,000, and your real estate taxes were 10. Well, you made 40. They're going to take it off.
Okay.
And let's say you paid $13,000 in interest to the bank. Well, $10,000 in real estate taxes plus 13 to the bank in interest is $23,000 deduction. They're going to take that off the top of your income.
That's for the first time home buying.
Well, not first time home. That's just for homeowners.
Just homeowners.
Yeah, homeowners.
Okay.
Homeowners in itself. But they can't go ahead and also make it a business. They can, but if we're just doing strictly your homeowner, well, you have a mortgage interest statement. You're able to take the taxes and real estate interest. But let's not confuse you here either, because a lot of people go, "Hey, John, I bought a home this year," and I go, "Okay, how much is your real estate tax?" "Oh, only $5,000 a year." So I'm like, "Okay, cool, right?"
That seems low, right?
Huh?
That's low.
Actually, well, it is low, but there are some places like that. And then I go, how much you paid in real estate interest? Show me the 1098-T. "Oh, I paid, $10,000. Well, 10,000 plus 5 is only 15,000. I said, "It's not going to do nothing for you." And they go, "Why? You crazy? Like, that is killing me." And I go, "Because your standard deduction, because you're married, is 24,000. All right? So you got to be higher than 24,000 in deductions in order for you to receive $1 tax break."
Oh.
You got it? So even though the person paid a whole year's worth of taxes, interest and real estate taxes, it didn't do no justice for them. Actually, I can show you that live on the software. So do me a favor. I'm going to bring up the software right now, and I'm going to show you an example of a mortgage interest statement, right? Where are we? There we go. This is a sample of a mortgage interest statement that I found online, right? So you see right here where it says mortgage interest received, $2,198.26.
Okay.
And then you see right here, real estate tax, $118.
Mm-hmm.
You know what this tells me? This person probably got this loan late in the year, because there's not that much data here. Understand? So let's say this person held it for 12 months. It'll probably say $14,000 in interest. Understand?
Okay.
And then the real estate taxes might show $10,000.
Just a longer period of time. Right?
Correct. So watch. Now I'm going to bring up the software, and we're going to do that. We're going to go, I know, guys, this is going to look like foreign language to you, but this is the mortgage interest statement, as you can see. Now I want to show you something, guys. All right? So you see how $15,000 in real estate interest received?
Yeah.
And then right here you see 10. What is 10,602 plus 20 plus 15037? It's about $26,000, correct? No, $25,000.
Yeah, about 25.6.
All right, so watch this. I want to show you something. I'm going to press copy, and I'm going to remove it. Now watch this.
$1.
No, I'm tricking the system, right?
Okay.
All right. Right now, this guy just paid $25,000. We witnessed that he paid $10,000 in real estate taxes. Mm-hmm. He paid another 14, basically 15,000 in mortgage interest. Nothing changed on his numbers though here, bro. Did you see that? Nothing changed. Look at. I'm gonna put back the numbers. Okay, you ready? Hey, John, I spent $15,037 in mortgage interest, and I spent another $10,062 in real estate taxes. Look at his refund. It never moved. You know why? Because his standard deduction is already from the IRS. Look it. I'll show you.
Okay.
So watch this. His standard deduction from the IRS, he's already getting $25,100 for being married. So what it's saying is they're going to deduct the first $25,100 from 106 that they made. So he's only going to get taxed $80,000.
$80,000.
Got it? So now my mortgage interest received and taxes need to be higher than $25,100 just for me to see any slight movement.
Okay.
Now let's trick the system. And then I'm going to show you how it goes into rental activity.
Okay.
So let's say he paid $20,000 in mortgage interest. Now watch this. It didn't move. You see that? Why? Is $20,000 more than 25?
No.
Exactly. Now let's go to the taxes and he paid $10,062. Let's see if it changes. All right, it didn't change. Let's see what causes the next change, though. Let's pay $35,000. All right, no, wow. So this person still would need over, oh my God, they need a lot. Let's see. Yeah, they're going to need a ton of real estate interest and taxes in order to go ahead and beat this deduction. All right, I think I know why, though. Check this out. Let me move this to the main home. All right, did you see that?
I did.
The minute I made it his main home, right, we were able to get that tax break. So if I put the $15,000 back, 1 second, all right, if I put the $15,000 back, he's going to get $1,278 as a refund.
As his main home, right?
Correct. But as you can see, 15
plus 10.
No, plus 10,062 is 25,000 change right here.
So it's still under that.
It's still under, but watch this. Every dollar more now, after that 25, watch this. Let's make it 30. Watch this. Bang. See that refund going higher and higher? Do you see the standard deduction is at 40 grand already?
I do.
What is 30,000 plus 10,000?
That's 40,000.
There you go. Do you see how it's being held here? So look at 106 minus 40 is 65.
Got it.
You with me?
I'm with you.
So a lot of people go, hey, John, but I paid $14,000 to the bank alone in interest. I hear you. And your taxes are 10. You're still under, bro. It's not going to do nothing for you.
So how do you do? So you're basically
can't do nothing.
You can't do nothing.
You put it in because you always want to report everything.
Yeah.
To build data. But in this case, the house is not helping you at all. At all. But in this case, let's go back to the original numbers, which was like 15,100, right? Let's say it's that, whatever. All right, and we go back to the 10,062. It's gonna bring his refund back down to 1,278
right?
and 90 right here. See that?
Okay.
All right, so check this out now. Now, very important. If I uncheck this, it's back to 1188. So let's say, Al, this home that you purchased, right? This home from Freedom Mortgage, you paid $368,000, and you closed on August 3rd, right? And let's say you bought this home for rental activity because you want to rent it to people, and you want to generate income.
Okay, rental property,
right? All right, real estate world, listen to me. All you realtors out there that are looking to get into the real estate world. This is a massive tax hack. I wouldn't even call it a hack. This is 101, 102, and 103, okay? Most people never like to receive electronic deposits. They want to say, give me cash, so they don't report because they're nervous. When they could report the whole thing and still not owe a dollar. So you could pay me right now $25,000 and change in rent, and I still won't owe a dollar on that 25 if I was renting it out. And you go, how?
Yeah, how?
Because every single thing that's a deduction as a rental property is income for someone else, which becomes an expense for you. So let me make that make sense. Your real estate taxes. That's an expense for me, but it was income for the state.
Okay.
You can't have two people pay taxes on the same income. One person's income is another person's deduction. Okay, watch this. You got $10 in your pocket. You go to Dunkin' Donuts. You spend the $10. It's income for them. How are you going to report that as income for you too?
Yeah, no, it's not. It's no longer taxable.
Do you see how much the IRS makes when people don't report as deductions as a business? They make double the taxes for each dollar.
All that money left on the table.
100%. You think they're going to contact you and say, hey, you forgot to write off your receipt from Dunkin' Donuts. Dunkin' Donuts is going to report the dollar that they made from you. And your dumb ass for not writing it off because you bought it for the office is going to pay taxes on the dollar because you didn't write it off.
Oh, my God.
That's double taxation.
It's like double jeopardy, they call it, right?
All right, that's only one person. Imagine times that by the whole world. They make trillions of dollars, bro.
Oh, my goodness. I could name probably 100 right off
So
the
watch
bat.
this now. What we're going to do now for all the real estate investors that are looking to rent property so that they can make income, rental income, okay? You're always going to get a mortgage interest statement at the end of the year. And it looks like this. It looks like this, just like this on the page, right? 1098, mortgage interest. It shows your lender's EIN, how much you paid, the principal, the date, how much is going to escrow, everything. And let's say you file your taxes now. You're going to have to check it as rental activity. Do you see that? That box right there?
Clear as day.
So let's say you bought this house strictly for rental activity. I'm going to click rental activity. Now, do you see what happened now? You don't see it on the screen, but what happens now on my screen, it shows that we must file a Schedule E. A Schedule E is a business return for rental activity. You got it?
Business return for
rental activity. Now I'm going to link this business return to that mortgage interest statement.
Okay.
Because that property has a mortgage interest statement now. I got to link it together. I got to bring it together. Now I press link. Now what it's going to do, Al, is import all the numbers from the mortgage interest statement as automatic expenses off the top. You don't even got to do nothing.
Oh, man. It's an automatic system.
100%. Now watch this, guys. We're going to go here. I'm going to click no real quick, right? Now we're going to go to the Schedule E, right? The Schedule E. Hold on. Give me a second, guys. Schedule E, where are you? All right. Test. I named it test. Where are you? Right here. All right, perfect. As you can see, this is a made-up home, 450 Test Street, all right? All right? It's a single-family home located in Fort Lee, and they're renting it out for 365 days out the year, and they didn't use it for no personal use, just strictly 365.
Okay.
Right? Now watch this. You see rental income? 0. But watch this. Don't you see how it imported the insurance? Don't you see how it imported the interest paid to the bank?
Yes.
Don't you see how it imported the taxes? So off the rip, I know that property as a rental income property right now is negative $28,000 before I collect $1 in income. So let me test you, Al, right now.
Uh-oh.
You ready? This is very simple.
I'm ready.
How much rental income can I collect on this in order to break even?
How much rental
income can I potentially collect in order to break even?
On the 28,000? Or to
No, right now this property is negative $28,033 negative $28,033.
So you would have to double that, right? It would have to be 56.66.
Wrong.
No.
All I need to do is collect $28,033 in income to break even.
Oh, to break even. Okay.
You get what I'm saying?
Okay, I see it.
So look it. If somebody paid me $28,000 in rental income right now, right? I'm not going to pay $1 on that because I'm already negative 28 on it off the top.
Okay.
You understand what I'm saying?
Understanding.
Now check this out. Check this out. I'm going to report the negative 28,000 right here. See rental income? Ready? Look at this. Cash from Joe Schmo. See that? And I'm going to report 28,033. Watch this, guys. Look what happens.
And this is under the rental, right?
This is under rental. We broke even. Look at the income, my guy. Everything's still the same. Nothing moved. Do you see that? Do you see that?
I see it.
Nothing got added here.
So
you understand?
I understand. So to break even, you would just have to the same number.
Now watch this. Well, let us increase the income now. If I increase how much they received in rent through activity, that means they're higher than what they have in expenses off the top. So let's say they collected $60,000 because they rent out the house for $5,000, 2 units. Understand?
Okay.
60,000. Now watch this. All right. What just happened to their income?
It went up
From 106 to 138. Why not 60 though?
because it's deducting that 28.
There you go. You got it. You got it.
Yeah.
It's deducting the first 28 in expenses.
Expenses.
But watch this. We still got guaranteed expenses here, guys. Okay? Check this out. You can make $60,000 in rental income, which is $5,000 a month, have $2,000 in insurance, $2,800 in insurance, $15,000 in interest, $10,000 in real estate taxes, and you also could depreciate on your home. The standard number of depreciation is 3.63. It could have changed, but I think it's that. 3.63. Yearly, up to 27 and a half years. So watch this out. Let's say the house, in this case, we go to the mortgage interest statement. Let's say it's 368. I'm going to bring up a calculator now. Watch. Sorry. 368,000 and 368,046. You see that?
Mm-hmm.
All right. Times this by 3.63%. I can write off an additional 13,360. Got it? Watch this.
Because of the depreciation.
Exactly. So watch this. I'm going to go to the
Schedule.
the Schedule E, which is the business return for rental activity. I'm going to go to depreciation, and I'm going to put 13,360, I guess,
Mm-hmm.
Watch what happens to the balance due now. Watch this. See how it's going down and down? So this person made $106,000 at their job and made and made an additional $60,000 in rental income. They made $166,000. They only being taxed $98,000. Because look at this now, guys. Watch this. Don't you see right here? It's $41,000 in expenses, $18,000 profit. 13,010 plus 15 plus this is 41.
393.
They have $18,000 in income. What is $18,000 plus 106?
124.
Look at that. What does it show? 124. So they have a profit of $18,000. And they're only being taxed on the 18 now.
They're only being taxed on the 18.
Yeah, because all the depreciation, the real estate taxes, and the interest paid to the bank is all a deduction. Understand? Which is $41,000. So now it gets even worse, guys. How about, let's say the toilet broke. You ready?
Yeah.
Watch this.
You know what? That's one of the
Broken
major
toilet,
things.
and you got ripped off by the plumber and paid $8,500. Ready?
Got
Watch this. Watch this. What is 18,000 minus 8,000? And look at the bill. It keeps going down. Only 1,100 they owe now. Now watch this. Okay, let's say they had landscaping. You see, landscaping. And let's say they pay $5,000 for the year in landscaping. Well, what is 10,000 minus 5? 5,607. Now watch this. Their bill's down to $37.
Wow. It just.
Do you see that?
Oh my God. I see it and I'm probably 100% sure that there's many people who don't do this.
No, because what they do is they try to defraud the government and not report their income, not knowing that if somebody who has the basic knowledge, well, not basic, but understands how to break this down to them so they could fucking not go to jail and enlighten them how it really gets done, they can still look at this guy. He made $60,000
Besides his regular income, right?
besides his regular income, and didn't pay $1.
So he was only required at the end to pay on taxes on the 98,000.
Only on the 98,000. And remember, I didn't add the electricity in there.
No.
If he has solar panels, he probably has that. And we just keep on adding and adding because it's all legitimate. Never be afraid to report deductions if they are real. Okay? Solar panels all right, which is probably $257 a month, so it's like $2,500 a year. Let's say he has utilities right here, right? Con Ed, we're gonna add Con Ed here, Con Ed, and that came out to $3,200 for the year. $3,220. Look at guys, it just keeps adding. You see? Now he's negative 1.3, but look, he got a refund now. Do people have electricity that they got to pay?
Absolutely.
Do they have interest and real estate taxes and depreciation? These are all solid guaranteed deductions that are there. Yo, drop a couple gems, something, man.
Show me the money!
Oh, man.
All right? So for all you real estate investors, do not be afraid to... You can go live. I want to see my sexy skin. Nah, for all you real estate or potential real estate investors that are looking to get in the real estate game as landlords in order to rent, do not be afraid to report your income that you're making. And you want it digital because, hey, anything a bank can see, they're happy. They can't see cash, okay? And even if you get the cash, report it because there's a great chance, a 95% chance, that what you pay for the whole year in real estate interest, real estate taxes, depreciation, along with insurance, along with supplies or repairs, along with utilities, that you're going to break even on it anyway. So why hide from the government?
Incredible. I think that that's a mistake that too many people make, man.
And here's the great thing about this. When you report it on the Schedule E, if you were to go for your next house, they don't even count that debt against you. You know why? Somebody else is paying that debt on paper. Bang. Now you get a proof for your other house.
Please say that again.
Here's what happens in the real estate world, all right? So if I want to go ahead and get a proof for my next house, I'll do what I just showed you, put it on the Schedule E, report the income that's coming in, report the expenses, and that shows the bank that I'm not even paying that house. Somebody else is paying that house. It washes itself out. So now it frees up that $5,000 a month bill for my next home.
This is like chess.
It is exactly like chess.
This is chess, man.
So what would I do when I get the next home? I lived there for 3 years. I rented out so I could go get the next home. And now it frees up that income. Put both of those properties as Schedule E's. Got it?
That is incredible, John. Oh.
So what this was is probably one of the most important podcasts for a real estate investor, a lot of realtors who are looking to, because a lot of realtors at some point in time when they really start making it, buy their own investment property and start renting out. This is how you got to do it so that you cannot, so you won't have to be afraid about reporting your income. And look at, you still maximize on your return where it helps you for your next property. Legitimately. You don't have to take a hard money loan to get it. No, why? You're reporting everything's being washed out anyway. But people, people like to hide. Give me cash.
Give me cash.
And then when they try to get a loan, they're like, "What do you mean? I made $400 off my property." And they go, "No, you didn't," because it only shows $10,000 in reported income. Because your lease says $1,000, but they really pay $5,000.
So you end up pretty much screwing yourself.
You always screw yourself. Look it. If you want to get anything with the banking system, with look it. You say you make $1 million. Let me see your transcripts. You say your properties make $1 million. All right, let me see your Schedule E's. And let me see your transcripts. Yeah, but I made it look. I have it at home. I'll go fuck what's in your house. I need to see what's on paper. I need to see what's filed. And we good. You understand?
So any real estate agents that might, be listening to the episode today or later or whenever it airs, could they contact Truthful Taxes?
They can without a problem. Look at 201-221. 7888, or you can actually hit customer service at truthfultaxes.com, or you can actually go to the website, which I prefer. Go to the website, go to the locations tab, punch in your zip code and the closest tax partner next to your IP address on your phone is going to pop up. And yeah, this is something that we do all the time. So feel free to contact us. And if you want to go ahead and deeper, you can always email us too, customer service at truthfultaxes.com, and we break it down for you. We get somebody on the phone for you. All right.
All right, man. That's awesome. Because I know that plenty of people that are going to be listening and want, to maybe call someone. And you explain it so good, man. It's
this is years and years of this, man. I try to. So one thing I learned was that at least for myself, working, is that yes, I feel like I can process information pretty fast. But if you break it down to the dumbest science for me, I'm very happy. Even though I could process it very fast, but it makes it almost like dummy proof. You understand? So what I'm showing it on the screen today is the most simplest form of something that's very complex, actually. Well, people make it sound complex.
You know, going through the tax curriculum, because I've had the privilege to now
Yeah,
become
man.
a tax partner for everybody listening out there. You know,
That's why every show for you right now is like, huh?
No, it's just, you know, I keep smiling because
you're getting a massive like tax partner class.
I've learned
crazy.
so much, and one of the things that I like about the way you teach, John, is that you make it simple. I mean, you know, for everybody listening out there, it's not about, you know, taking it in a bad way when you say dummy proof. It's like they got the series of books, you know, Taxes for Dummies. You got Real Estate for Dummies. You know the series of books. So,
but you know what I also learned? Reading's cool. Seeing's better.
Seeing's better. Some people are actually more visual
100%
than anything else. So
you see, I'm an engineer by trade, right? Dealt with boilers the size of cruise ships. Not even joking. Imagine giving me a book and saying this is where the shutter valve is and this is how you lower the viscosity level of the oil. I'm going to go, but where is it? I need to see it, my guy.
Yeah.
Do me a favor. How you shut off the boiler? That's the switch? That's not in the motherfucking book. Because it says shut off switch, but it doesn't have the picture of where the switch is.
That's right. You need to be hands-on.
No, of course. Of course. This is why a lot of engineers don't get fired, because those boys are first on call. You understand? So, me showing you this now gives you a better perspective as to where it goes, how it goes. Seeing those numbers fluctuate, go up and down is very important to see that. Report all your income, man. You won't be afraid.
So for the listeners listening out there, including real estate agents that are, you know, just looking for investment properties, financially, where would you want to be? Is there a certain place that you got to be before you take that next step to actually buy an investment property? You know, I'm a homeowner.
I think one thing that's very, very important before you take the next step to buy your investment property is to have the right tax preparer or accountant who knows investment property taxes. Because you're going to go ahead and buy investment property to make more money. There's a second part to this, the most important part. You got to report it on your taxes. So you're either going to make money to bleed the money at taxes or make money and actually not pay $1, just like I showed you, in taxes.
All right, so you make sure you contact Truthful Taxes if you want that done for you.
Truthful Taxes, a brand for the people and a company for the culture.
That's my girl Amanda right there, Amanda Hernandez. She got the best last name on the planet.
All right, so
she works for our billing department. Shout out to the billing department.
Man, John, a lot of information to process, but in a way where it's easy to process. So we appreciate you.
We're gonna be doing a lot more of these because, you know, I feel like podcasts are great. You know, a lot of different types of information geared on whatever type of podcast it is. Mm-hmm. But, you know, I want to bring something where you see while you're hearing so it can make sense.
You know
what I'm saying? I could talk to you all day, but if I'm talking to you, you don't really need to listen to me too much because you already have it in front of your face processing.
Absolutely. So for the YouTube channel, this is this is so good.
Yeah, man.
And the podcast is going to be up pretty soon on podcasting host sites, Spotify, Google Podcasts, and all the other ones very soon.
Yep.
Right now we're on YouTube, so you are privy to the visual right now.
Yeah, man.
And you get to see Jonathan work through the different programs and different advice that could be monumentally beneficial to you. So stay tuned.
Yep.
We're here in Garfield, New Jersey, True Pod. My man Jonathan Hernandez, please give us the socials so that everybody that wants to check you out.
You keep asking for my social security number, my man, you're not going to get it. All right? I'm letting you know that right now. You're not
the IRS is on me now.
No. You can follow us at truthfultaxes.com or we are truthfultaxes.com, which is our landing site for all our tax partners throughout the U.S., which we have over 200 right now. And you can follow my man Alex. What's your handle?
Alex_Doomsday_
my guy.
LAINEZ. You can
yes.
check me out on IG.
And then our True Pod page itself at True Pod. True_P_O_D. And then our YouTube channel at True Pod. Like, comment, subscribe. curse me out, whatever you want to do. You know, we curse each other back, and then I do your taxes after. You know what I'm saying?
There you go. That
All right, yeah. So I'm actually done with your taxes. So in order to pay me, I got Zelle, I got Cash App, and I could take from your bank account. Which one do you want?
All right, so this is True
All right,
Pod
man.
Studios here with Jonathan Hernandez.
Yes.
We covered the process, and
Yes.
which is my mind went just super blank right now.
Investment.
So we're out of here, man.
All
Appreciate
right,
you
man.
guys
Take
tuning
care.
in.
God bless. All right.
Just don't provoke me, cause I don't need no cellmates. I'm in a two-seat, doing drops like a mailman. This ain't no hoopty ass, she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we catch him off sides, he won't make it, no. Money on my mind.